Okay, this is the August market report for Southeast Michigan. And what we're seeing and have been seeing for the last couple of months is sort of an evolving story. And the story is, are we coming close to or moving towards the settling back to sort of a normal market? So is the recovery, that bounce up from the recovery, finally starting to sort of soften and peter out a little bit? And the evidence that we're seeing a little bit each month is that that's probably true. July's transactions for Southeast Michigan were down from last July. That was the first month in probably certainly 18 months that we had year-over-year comparisons where a month was down over the prior year. So that's just 1 month, but what we've been seeing is that inventories for properties above $250,000 have been starting to rise a little bit. The higher priced you get, the more they've been rising. New listings coming to the market, which is the pace of new inventory, new activity, also has been accelerating. The higher the price, the more it's accelerating. The lower the price, it's actually still going down. The number of homes for sale under $250,000 for Wayne-Oka, Macomb, Livingston is still about 20% less than last year. But that decrease is actually getting less worse. So that tells us that although at the low end, you're not going to see a lot of inventory relief in the next couple of years simply because there's not any new inventory being created. In fact, if you look at the statistical numbers, the numbers even that we'll publish, it'll show you that the under 250 market is kind of flat in terms of value increases, price per square foot. And it's not that it's flat, it's just that values are rising pretty quickly in the under 250. There's still a lot of demand and activity there. But as values rise, of course, those 239 values suddenly move up above 250, and the inventory shrinks, the number of homes shrink, and the 250 to 500 grows. So we're seeing fewer sales and a shrinking inventory, not necessarily because of sales, because those values are rising and they're being shown in the next price category. But rest assured, the values under 250 inventory is still strong, particularly the 125 to 250, that range. You're seeing really strong activity and still seeing multiple offers. And as you rise up a little more to higher priced ranges, you're seeing, again, seeing a little more inventory to choose from. And as you get to the high end, the above $500,000 market, we're seeing a pretty strong and significant change there. Inventories are rising pretty quickly. And we're seeing for the first time, although sales are up, and they have been up all year, and it's been the story that we've been telling for the upper end all year, is that sales are rising, but inventory is rising even faster. So for sellers, it'll feel a lot slower, and that's why values are flat to even down in the upper end. But we're seeing that accelerate even faster. Inventories are rising. It's because equities have gone up, and the high end was the first to recover. So it's the first to react to that with higher equities. So inventories are rising, and that's a good thing. That's a positive reaction to the recovery. We're also seeing sales slow down. In fact, in the last 4 months, we had 2 months up, 2 months down. That tells me that the market's adjusting, because up until that point, every month was up. So that tells me the market's adjusting and that sales are probably will start to settle down a little bit. That could be temporary. You have uncertainty in the market. You have the stock market volatility is keeping some of the high-end people out of the market. The economic uncertainty in general, the election, all those things are keeping things quieter in the marketplace. So it isn't necessarily, we're predicting that the high end is a bubble bursting, just saying that in terms of a long-term recovery for all the different price ranges in the high end, it's just out of balance right now. The inventory is rising faster than demand. We can expect that to happen probably all of next year as well, unless something dramatically happens as a result of the election, which we don't anticipate. So for high-end sellers, you need to be patient. You need to figure that your home will probably sell for a little bit less next spring than this past spring, and that it's not a dramatic change, but be aware that there's change, and it's going to feel a lot slower. Since there are more listings per buyer out there, it's just going to fewer showings, less and less activity. That said, there are still some numbers sort of to keep in mind. And we looked at, for example, how many homes are selling either at or above list price. And it's running at about 40% under 250. So a little less than 50% of homes are selling at or less than 250. You'd expect that. It's about a third of the properties in that 250 to 500 range are running at or above list, and then about a quarter of the properties over $500,000. And those numbers are less than they were a year ago. So that tells you the market's slowing a little bit. There are fewer homes selling at or above in each of those categories, fewer percentages. We also look at number of homes that have sold in less than 10 or 30 days, and the less than 10-day category actually follows the same percentages, 40%, a third, and a quarter for each of those price points. And the selling less than 30 days, you've got 70% of the transactions are listings have been on the market less than 30 days for the under 250, and it's about 60% for the 250 to 500 and about 45 for the high end. Again, those numbers are a little lower than they were a year ago. But what that tells you is that if you're, as a seller, if your home is on the market, after 30 days, no matter what price point, there's enough activity, whether it's 70%, 60%, or 45%. In each case, nearly half or more of the buyers have taken a shot at your property and passed after 30 days. So that means you probably need to take a look at price and condition, all those things. So, and in most cases, particularly at the lower end of the market, the lesser, under 250, you probably know within 10 days whether your home is priced right in activity, because you ought to get strong activity even in that quick price range. Another thing to be aware of as we settle into a little slower market, a little more normal market, where things are taking longer to sell, is when you can't help but go online every once in a while with just general voyeurism to look at what Zillow is doing and other online valuation models. For the most part, they are all going to be, since they're about 9 months behind, for the last 2 years, they were typically undervaluing what your home was really worth. For the next year or more, they're going to be missing on the high side. You're going to look at a Zillow and say, and it's going to show a number that's probably higher than the market will dictate. And that's really across all price ranges. A little less so at the lower end, more so at the upper end. So keep that in mind as you look at it. But in general, although we're seeing first signs of a slowdown, in ensuing months we'll be discussing whether that's taking hold or not, this is still a very good real estate market. Thanks.